South Korea's central bank cuts interest rates for the first time since May 2020. United Kingdom reports a 0.2% increase in gross domestic product. And Tesla CEO Elon Musk introduces a new robo-taxi and robo-van.
You could fall asleep and wake up at your destination.
Welcome to the Economic Bulletin, where we present comprehensive coverage and expert insights on key updates regarding pivotal economic trends and financial shifts. Welcome back. We start off with the United States, where the Bureau of Labor Statistics reported that the producer price index for final demand remained unchanged in September, following a 0.2% increase in August. The index for final demand rose 1.8% for the 12 months that ended in September. The services sector saw a slight increase of 0.2%, while the goods index fell by 0.2%, mainly due to a 2.7% drop in energy prices, especially in gasoline, which decreased by 5.6%. However, food prices rose by 0.0%, rather than energy increased by 0.2%. On another note, Fitch Ratings has estimated that Hurricane Milton could result in insured losses between $30 billion and $50 billion for Florida property owners. This brings the state's total insured losses for 2024 to over $100 billion, following previous damage from Hurricane Helene just 2 weeks ago. Fitch analysts noted that further increases in losses could depend on the demand for materials needed to repair damaged properties. However, state officials remain optimistic that Hurricane Milton won't deal with a devastating blow to Florida's recovering insurance market, while the destruction from the Category 3 storm, which claimed at least 4 lives, is still being assessed. Property damage appears less severe than expected. Insurance Commissioner Mike Yaworsky said reforms, such as reducing lawsuits against insurers, have strengthened the market's resilience. However, Wall Street analysts estimated insured losses could reach to up to $175 billion, potentially destabilizing smaller insurers. Governor Ron DeSantis dismissed those projections, while Citizens Property Insurance confirmed it can handle claims without needing to impose extra charges. TD Bank, one of Canada's largest lenders, has agreed to pay over $3 billion and pleaded guilty to criminal charges in the U.S. after enabling drug cartels and criminals to transfer hundreds of millions in illicit funds. Prosecutors revealed the bank failed to implement adequate anti-money laundering controls for nearly a decade, despite staff raising concerns. The settlement includes $1.8 billion to the U.S. Justice Department and $1.3 billion to the Treasury's Financial Crimes Enforcement Network. The bank is also facing growth restrictions in the US and will undergo external monitoring. Moving to Europe, the United Kingdom economy returned to growth in August following 2 months of stagnation driven by expansions in services, manufacturing and construction. The Office for National Statistics reported a 0.2% increase in GDP in line with analysts' expectations. ONS Director for Economic Statistics noted that while all sectors grew in August, overall growth has slowed compared to the first half of the year. Strong performances were seen in accountancy, retail and manufacturing, with construction also rebounding from July's decline. However, declines in wholesaling and oil extraction partially offset these gains. The French government has revealed its 2025 budget plan, aiming to slash €60 billion in spending and introduce tax hikes to tackle its growing deficit. The country's deficit is expected to hit more than 6% of the GDP by the end of this year, and the government hopes to bring it down to 5% in 2025, with a long-term goal of reaching the EU's 3% target. €40 billion will be cut from public spending, hitting all ministries. Education will face the biggest reduction, with over 4,000 teaching jobs to be cut. Another €20 billion will come from temporary tax increases targeting high earners and large companies. This is expected to raise €10 billion next year.
Alors évidemment, ce sera difficile. Il faut le dire que ce sera difficile. Évidemment, ça implique de bousculer nos pratiques et notre façon de dépenser l'argent public. Mais c'est nécessaire. Et si nous ne le faisons pas, et il n'y a pas besoin de dramatisation pour dire cela, si nous ne le faisons pas, la prochaine crise sera douloureuse. Et elle sera d'abord douloureuse pour les emplois et pour les petits salaires. C'est pour cela que le premier objectif de ce budget et de la trajectoire qui l'accompagne, c'est de réduire notre déficit et de contenir notre endettement.
In South Korea, the central bank cut its policy rate by 0.25 percentage points to 3.25%, marking its first rate reduction since May 2020. The move aims to revive the sluggish economy despite concerns over household debt. The Bank of Korea cited slow domestic demand, 6% in September, as key reasons for the cut. Central Bank Governor Ri Sang-yong suggested further rate cuts are possible if economic conditions warrant, noting that house prices in the Seoul area have cooled significantly since August.
오늘 금융통화위원회는 물가 상승률이 뚜렷한 안정세를 보이고 있는 가운데 거시 건전성 정책 강화 효과가 점차 나타나고 있으며 외환시장 리스크도 다소 완화된 만큼 기준금리를 3.5%에서 3.25%로 25bp 인하하고 그 영향을 점검해 나가는 것이 적절하다고 판단하였습니다.
In commodities, Turkey has imposed anti-dumping duties on steel imports from China, Russia, India and Japan, with the highest tariffs on Chinese products. This move is expected to boost stock prices for Turkish flat steel producers. The duties affect around 4 million tons of imports valued at $2 to $2.2 billion, with tariffs ranging from 6.10% to 43.31% of the cost insurance and freight prices. This decision follows appeals from domestic producers and comes amid rising trade tensions between China and the European Union over tariffs on various goods, including electrical vehicles. Japan plans to raise its liquefied natural gas purchases to at least 12 cargoes annually, up from 3, to enhance energy security against supply shocks. This will increase its total LNG purchase to approximately 0.84 million tons per year. As the world's second largest LNG buyer, Japan aims to expand its trading role despite falling domestic demand. Since December, JERA, the largest power generator, has been buying 1 cargo each winter month, contributing a strategic buffer LNG managed by the Ministry of Economy, Trade and Industry. The British multinational Universal Bank, Barclays, projected that a possible Israeli strike on Iran's oil infrastructure could lead to a sustained disruption of 1 million barrels per day. The scenario may push oil prices up by at least $15 per barrel. The bank noted that such an attack would create an effect on oil markets, potentially alleviating the current spare capacity surplus while introducing a considerable geopolitical risk premium. Barclays also set its fair value estimate for Brent crude at $85 per barrel for the upcoming year. Furthermore, Fitch Ratings report that the geopolitical risk premium in crude oil markets has increased to a variation of $5 to $10 per barrel, up from $3 to $5 per barrel. This increase is attributed to the increased risk of a broader conflict in the Middle East that could disrupt oil supply from countries including Iran. Consistently, benchmark prices have recovered to between $78 and $80 per barrel, though still below average trading levels expected for 2024. Fitch's base case assumes Brent crude will average $70 per barrel in 2025, reflecting fundamental supply and demand challenges. Oil prices softened on Friday, but were set for a second weekly gain as investors weighed the impact of hurricane damage on U.S. demand against any broad supply disruption if Israel attacks Iranian oil sites. Brent crude oil futures were down 0.8% at $78.74 a barrel by 13:24 GMT. U.S. West Texas Intermediate crude futures slipped 0.9% to $75.20 per barrel for the week. Both benchmarks were headed for gains. The potential disruption as Israel threatens to target Iran's oil infrastructure raises concerns over energy security, with key oil importers like China and the United States scrambling for alternatives, while the global economy faces the prospect of heightened inflation and rising energy costs.
Global oil markets are on edge as Israel threatens to strike Iran's oil infrastructure, a move that could severely disrupt global energy supplies. With Iran responsible for approximately 3% of the world's oil production, any attack on its oil facilities could trigger supply shortages and send oil prices skyrocketing. If Israeli strikes materialize, global crude prices could rise sharply, with potential surges exceeding $100 per barrel. The Strait of Hormuz, a vital shipping route through which 1/3 of the world's oil flows, may become a focal point for retaliation, heightening concerns over energy security. Major oil importers like China, which heavily relies on Iranian oil, could be forced to seek alternative suppliers such as Russia or Saudi Arabia, while the US might expand its oil exports to fill potential gaps. However, higher oil prices could place additional strain on the global economy, especially in the US, where inflation and rising energy costs could become political liabilities ahead of the upcoming presidential election. For now, global markets are anxiously waiting the situation, with hopes that diplomacy prevails to avoid further disruption to the fragile energy supply chain.
Joining us to discuss the latest developments in the oil market is Ali Hamoudi, economic analyst. Welcome to Qnews Economic Bulletin, sir.
Thank you very much.
It's our utmost pleasure. How do you assess the current geopolitical climate regarding Israel's threats to strike Iranian oil facilities? And do you see this imminent, sir?
It's the news, or many analysts are expecting an imminent strike on Iran to happen. Most probably over the weekend, I would say, simply because the international markets will be closed, so there will not be so much volatility on the oil price. But so far, we haven't seen really. The war between Israel and Hamas in Gaza has been going on for over a year. We have seen spikes in oil prices, but we haven't seen major changes in the way the market looks on oil prices. The main concern is obviously the demand rather than the supplies. So that's why, as you mentioned earlier, oil is up for the second week. So we're up 1% for the week, but we're still up 12% for the whole month.
Sir, in your opinion, what would be the immediate and long-term effects on global oil prices if Israel were to attack Iranian oil infrastructure?
That all depends on what Iran will do. If Iran escalates with a tit-for-tat strike on Israel, if the Strait of Hormuz is threatened, or the shipping through the Strait of Hormuz is threatened in any way, then we could see a spike in oil prices. I suspect we will see 10% hike immediately if there is a confirmed strike on any of the oil infrastructure in Iran. But I think this will dissipate if the day after the news is confirmed. So it all depends on what will be the reaction of Iran to escalate, or to basically say this is it.
Why should Iran, sir, say this is it? Why?
I did it before, if you remember. Last time when it hit Israel in April, Israel hit back, and basically they said the matter is closed. So again, it all depends whether international shipping, because there are many countries that depend on the Strait of Hormuz for their exports, not only Iran. Iran exports or produces about 3 million barrels. Maybe it exports 1.5 million to China, for example. But there are other countries, major countries in the GCC, which depend on the Strait of Hormuz almost 100%, like Iraq, like Kuwait, Bahrain, and Qatar. Less so the United Arab Emirates and the Kingdom, Saudi Arabia, because they have the Red Sea, and they have Fujairah on the Gulf of Oman for the UAE.
Sir, so as you're discussing, sir, the Strait of Hormuz, how do you see the measures could be taken by global powers to secure this strait, of course, in the event of the increasing tensions that's taking place in the Middle East at this point?
Whenever there's tension in the GCC, in the Gulf especially, the Gulf has seen so many wars in recent history, starting in 1980 between Iraq and Iran, and then the Kuwait war and then the 2003 war. The Strait of Hormuz always came into the equation, and the market will always look at it. But the question is, I think everybody should ask: has Iran ever closed the Strait of Hormuz? And the answer is no. They've never done it before. They've done attacks on various ships during the Iraq and Iran war in order to basically get at each other. But it hasn't been closed completely for international shipping. And the U.S., they've got the Fifth Fleet in the region. They are open should there will be a credible threat from Iran, which I very much doubt, because they'll be hurting themselves more than anything else.
Sir, how might China respond if Iranian oil supplies are disrupted? Do you think, from your own perspective, this could lead to a shift in their energy alliances?
I mean, for sure, they have many other alliances and many other suppliers that they could rely on. Okay, they get probably Iranian oil at a discount, but should Iranian oil becomes unavailable for China, then there'll be others who will step in quickly from within OPEC or even outside OPEC. But within OPEC, for sure, you've got Iraq and you've got Saudi Arabia, who's got spare capacity that can produce whatever barrels are lost from Iranian production in order to satisfy China. I think the further or the most important threat to China is not the lack of supply of oil, but rather the price of oil. China is trying seriously now to invigorate and stimulate its economy. So any spikes in oil prices, and if they stay elevated for a long time, this might jeopardize this plan to invigorate their economy, because if inflation goes up and the world suddenly starts buying less products, then this will be a big problem for China.
Mr. Ali Hamoudi, brother, economic analyst, thank you so much for your informative input, for your insights. Really thank you for being with us on our show today. And we move on with the news, where the gold rose on Friday after U.S. inflation data cemented prospects of rate cuts this year, restraining the dollar below recent highs, while safe haven demand stemming from the geopolitical tensions in the Middle East also shifted and lifted bullion. Spot gold rose 0.7% to $2,647.19 per ounce by 14:05 GMT. Gold futures gained 0.899% to $2,664.60. In the tech world, Tesla CEO Elon Musk introduced a new robo-taxi and robo-van, signaling a shift toward robotic vehicles. The robo-taxi, featuring gull-wing doors and no steering wheel, is slated for production in 2026, a target price under $30,000, while the robo-van can carry up to 20 passengers. Musk mentioned plans for self-driving taxis, but provided into details on the app for users. $0.50 per mile for the Cybercab and 5 cents for robo-vans. The vehicles will utilize all-and cameras instead of LiDAR, which has been common in the industry. U.S. stocks are rising towards records Friday as the country's biggest bank rally on encouraging profit reports, though a slide for Tesla is keeping the market in check. The S&P 500 was 0.5 higher in morning trading. The Dow Jones Industrial Average was up 0.6%. The Nasdaq Composite was lagging the market with a gain of 0.1% as of 14:05 GMT. In Europe, the pan-European stock 600 traded up 0.6% at 14:28 GMT, with most sectors in positive territory. Financial services led the gains, up 1.05%, while telecom stocks fell 0.35% as the loan loss. Stocks fell 2.5% in Shanghai for the latest sharp swing ahead of briefing schedule for Saturday by China's finance ministry. That's all for now. Here's a roundup of today's key headlines. South Korea's central bank cuts the interest rate for the first time since May 2020. United Kingdom reports a 0.2% increase in the gross domestic product. And Tesla CEO Elon Musk introduces a new robo-taxi and robo-van. That's all for today's economic bulletin on Q News. Stay connected for more news and updates.